A month after the United States Securities and Exchange Commission's decision to deny Bitwise Asset Management's application for a Bitcoin ETF, the industry is once again faced with the question of what needs to be built in order for institutional capital to move more seriously into the space. However, there are a growing number of companies that are already working to identify what's missing from crypto and to build the platforms that the industry needs to flourish as an institutional investment class. Recently, finance magnate spoke to Marc Bhargava, co-founder and president of New York-based electronic agency prime brokerage Tagomi, a company that's been working to create institutional-grade brokerage services within the crypto industry since January of 2018. Since its inception, the company has expanded into several cities across the country and in the UK, and has formed partnerships with some major players within the space, including ICE's Backed. Tagomi was also recently granted a BIT license from the New York Department of Financial Services. Marc spoke with us about the history of the young company, as well as plans for the future and predictions of what's coming next for crypto. So Marc, can you speak a bit just about who you are and what you do and how you got involved in crypto to begin with?
Yeah, sure. So I got involved in crypto actually a little bit more in the academic sense. So in graduate school, I was working with a professor on could blockchain be used for technologies like gun registries and voting and other areas where maybe could make the world more secure and could really help more widespread adoption of blockchain, and blockchain could make those processes better. So that was kind of what I was focusing on in 2015 and 2016.
Mm-hmm.
And then I really started more investing in the space. So I worked with one other person over at Brainchild. We were seed investors in Blockstack, Algorand, early in Filecoin and Zeppelin, early investors in other digital assets as well. And so, that's when I really got much more deep on the technology behind different protocols and also understanding crypto assets and their use for governance and other features. So at that time, in 2017, I started hearing a lot in market folks asking for more of an institutional platform to trade crypto. So retail investors, had their exchanges, had the Coinbases or Binances or Krakens of the world. But someone looking to do larger trades and wanted to do it electronically rather than calling up an OTC, wanted to use more advanced algo types, wanted to do things like lending and shorting, and most importantly, just wanted it done on an agency basis, meaning wanted someone to execute these trades and then post-trade report, show them like how they did it the best way possible for them. None of that feature set really existed because it was a really nascent market. Mm-hmm. And so Jennifer, one of my co-founders, she was at Union Square Ventures, and we were both really looking for this company for a year who could be a more institutional prime brokerage service that was both electronic and was agency-based, and didn't really find anyone really compelling. And it was only when we met our co-founder, Greg Tusar, that the three of us decided to team up and actually started in January 2018. And, Greg's background was that he was one of the first people in electronic trading. In the 90s, he actually helped code up the first instance of sending multiple orders at the same time to an exchange.
Okay, wow.
So he's been in electronic trading since electronic trading. And yeah, his first company, he scaled to 70 people as CEO, sold it. Then through an acquisition, ended up being the global head of electronic trading at Goldman, where he was a senior partner and head of electronic trading there for, was at Goldman 13 years before leading a lot of KCG, which was then sold to Virtu. So he had just great experience building, selling these companies, seeing how the industry had evolved for equities and FX, which had moved to electronic agency trading, which is where we hope crypto is moving. And so the three of us teamed up. We raised our first round from Peter Thiel's Founders Fund. And in 2018, really built out the team and product, brought in a lot of experienced people from places like Citadel and Two Sigma, and launched first instance of the product very late 2018 and really in 2019. And so for the first 6 months of 2019, I've been, launching different products to help people place better trades at better prices, and now doing things like lending and shorting and margin. And we're very lucky to also then get a second round of funding led by Paradigm, with folks like Pantera and Multicoin and CoVentures, Morgan Creek, Galaxy, and others. So it's really great to work with some of the best people in the industry and to be scaling this product.
Yeah, that's fantastic. So can you tell us a little bit more about specifically what Tagomi does and what those products and services that Tagomi offers?
Absolutely. So one is best execution trading. So what that means is if you came to us with $1 million, we would break that up into many small pieces and smart route it across 10 exchanges and 4 market makers where Tagomi has accounts. So instead of you having to open up accounts on all these different exchanges and develop called market maker relationships. Tagomi already has that and has great rates at it and has built out all the connectivity in an automated way. So you can come just to Tagomi and do that 1 million trade, and it'll get executed across those 14 liquidity sources. And that will end up being a better price for you because we'll route to wherever the price is best. If it's a very large trade and it can move the market, it's also helpful to obviously spread it across different liquidity sources and even to use things like algos. So, we can do some very large orders we've done over multiple hours or even days. And so that's the concept of best execution. We're not the other side of the trade. We're not holding Bitcoin on our balance sheet to sell to you and mark it up and chat with you over the phone. We are here to use technology to help you do larger trades with better execution. And we, for every trade, will give you a post-trade report showing exactly how we did that trade. And so folks like Bitwise, for example, they're working to be an ETF. In the ETF world, it's a requirement. You have best trade execution and that you work with an authorized participant. And so obviously Bitwise like using us, but so do the crypto funds and their LPs who get lower fees because they're using our technology.
Okay, so on that note, are there any plans for a Tagomi Bitcoin ETF?
No plans at all. So we're very focused on being a prime broker. So one piece of that is, like I mentioned, best execution, helping folks do larger trades, get them better pricing, be more transparent, act as an agent. Other parts are we'll also help folks. We integrate with custodians. So it was announced yesterday that we're one of the first 3 clients on Bakkt for their custody product.
Right, yeah.
We work with Coinbase and others, BitGo, Gemini. We have a lot of different custody partners. And so we, in addition to helping you with best execution, can also help you store your digital assets, and we get you a great rate, and we can help you spread it across different places. And now what we're doing in terms of prime brokerage is helping you also lend out those digital assets or provide you margin to buy more of them. And with folks lending and borrowing on the platform to facilitate shorts as well. So it's really that full functionality of prime brokerage. And we're bringing the same approach we had for execution and for custody, which is really, we'll own the accounts and we'll help you get better pricing and work with better players. Same thing in terms of teaming up with lenders to help, lend out coin, working with a lot of large funds who want to borrow for short purposes, whether quants or they're directional, and then also helping facilitate margin for folks who are willing to collateralize some of their digital assets. So this full prime brokerage function we've really seen missing in the space, especially on a more agency basis or a more technology basis. It's generally bespoke things people might do over the phone with higher markups and things like that. And we're looking to kind of really change that and make it look a lot more like equities. So like what Interactive Brokers or, Goldman's agency trading desk or others that you can get in equities or FX, but you haven't really seen in crypto yet.
Right. So this, as you said, it seemed like, before Tagomi, you were looking for a company like Tagomi and it didn't really exist. Do you have any thoughts as to why that was? Why hadn't another player come in and created something like Tagomi before?
Yeah, so I think one part of it is, the whole industry is 11 years old, but in reality, maybe just 5 or 6 years in terms of a little bit broader adoption. And 2017 was kind of the first time you saw a little bit more quote unquote institutional players. So, it was primarily retail. The industry still is primarily retail. But in 2017, you saw the first sort of crypto funds forming. You saw the first index products. Founders Fund obviously had been early in the space. You started seeing a few more venture funds enter the space. And so it wasn't institutional in the sense of, Wellington or Capital Group, but you started seeing people who were doing $100,000, $1 million trades, and you just hadn't seen that when it was a 100% or almost 100% retail market. And so that kind of group of clients were looking for tools that they might have been already familiar with in equities or FX, where 70, 80% plus is done electronically, is done on an agency basis. And so at the very beginning, it was sort of like these desks, OTCs, were created to sort of service them, and those guys could buy off of exchanges and kind of aggregate it, mark it up, negotiate a price with you. So you started seeing a kind of response in 2016 and especially 2017, but you didn't see the full-fledged, more advanced technology approach. And so that was something we looked for. There were certainly people trying it. Many times they were out in California and didn't really have a lot of experience in how financial markets or infrastructure works. You also saw the reverse. Lots of times people were in New York and, didn't really understand having a slick user interface and making things easy to understand and use and have reporting and visuals. And so what we tried to do is say, hey, could we find a team that could do both? And so we have people who are early investors or early employees at crypto companies, but we also have a lot of people who come from high frequency trading and from banks, and we sort of mesh that together to create a product that we think definitely resonates both with more crypto native and crypto funds, but also more institutional players. So we have a $20 billion hedge fund in the UK on our platform. We have RIAs trading with us. We have folks, whose LP base includes Yale's endowment and Sequoia and folks like that. So I think really bringing all those different elements together, it's also about having kind of the right culture and the right experiences.
Right. And before we started this interview, you mentioned that you've got offices in a few different cities around the world. Can you talk a little bit about your global presence and why you have established this global presence?
Yeah, so we're still less than a 2-year-old company. We have 20 people. We're primarily in New York, New Jersey, but we have offices in Chicago. Our COO joined us from Citadel. He was at Two Sigma before that. He was in Chicago. So was our director of engineering, who was at KCG. So we ended up hiring, back-end engineers, especially in Chicago, in New Jersey and New York, a mix of sort of tech and legal. In California and SF, we opened up an office to have some of the best front-end and design people who came from places like Uber or Zenefits. And recently, as you pointed out, we have a few folks out in London as well, from Tower and from Jane Street. And the reason for that is we're now trading 24/7. So we have clients in Hong Kong and in Singapore. And even though everything is automated, we definitely like having DevOps engineers watching the system because people are placing larger trades. And so, it's been definitely nice to have a distributed team that can have someone around the clock. We also work with clients on helping them plan really large trades, thinking through the data, helping them figure out the right approach. And so it's been great from that perspective. But of course, it has all the challenges of managing a team globally.
Yeah, definitely. Are there any plans on the books for now to expand even further in that sense?
Yeah, so a market that is really interesting for us, where we get a lot of inbound interest and probably haven't serviced it as well as we should to date, is what's going on in Asia. So specifically, you have to break that down further. For us, Hong Kong, Singapore make a lot of sense. You have people from New York or from London who have opened up trading shops there. They have very similar sort of demands as our clients in the West. So they've been kind of our sweet spot. But if you expand outside of that, Japan and Korea both have very strong crypto retail presence, and increasingly in Japan, you're seeing a little bit more FX to crypto. In Southeast Asia, you're seeing stablecoin adoption growing, and sort of a whole layer of payment providers using stablecoins out there. And then in mainland China, you've seen obviously a lot of the mining industry, but also 3 of the world's largest exchanges that also run large OTC shops. And recently, with the president's comments out there, sort of effects coming out of that as well.
So I want to ask you a bit about, your experience so far being such a young company who's working with a lot of institutional investors. There's been this sort of narrative that's going through the cryptocurrency industry, the Bitcoin industry for the last couple of years, that there's just this wave of institutional capital that's just around the corner. It's just waiting, for the right opportunity to, the right platform, the right, whatever to enter into this space. However, we've seen a couple of things kind of, including Backed was one example. This wave of institutional capital that people expected to suddenly come and appear on Backed, hasn't really come. Things are definitely improving on that platform in terms of trading volume, but still it hasn't gotten quite the amount of attention from investors that people thought. So I guess, as a company that works with a lot of institutional investors, what are your thoughts on this? I mean, do you think that,
Yeah, so I think it's come in different waves, and certain things have been different than we expected. So, the first wave was crypto funds and index products. So I think you still see a lot of family offices or endowments or others not directly interacting or buying Bitcoin, but investing in funds. So if you look at a crypto fund like Paradigm, it has Sequoia in it, it has Yale's endowment in it, it has a whole slew of family offices and endowments. And so, you haven't seen a lot of the direct investing there, but you do see this growing group of crypto funds. In addition to Paradigm, I'd point out folks like Pantera or Multicoin or Polychain. And so many people are sort of investing through the crypto funds. And I think that's part of the first wave, and also the index products like Bitwise. The second wave we've seen more recently. So the first wave sort of started in 2017, kind of grew in 2018 despite the bear market.
Mm-hmm.
And now in 2019, we see a lot more quant funds. So like the ability to go both long and go short. So lending markets, the ability to borrow has really come around in 2019. Folks like BlockFi or Celsius or other lenders have helped facilitate that. And so now you've seen, and we're seeing on platform, quant funds that maybe don't have a directional view on crypto, but really like the ability to go long short and to try trading strategies. You also saw a lot of market makers enter to provide more liquidity on exchanges, really large market making shops in New York and Chicago and globally. And so this second wave, 2018-19, has been more those sort of quant trading funds and HFT. And you're seeing what I think is pretty clear in 2020, sort of a big tech wave. So that includes Facebook. So, we were expecting maybe Morgan Stanley or Goldman or JP Morgan to be more involved in crypto, in 2017 when we were talking about when are the institutions coming. But we've seen now some of the world's largest institutions at least stake a claim saying we're coming. And, Facebook is a huge example of that, but there's
Right.
also Square and there's SoFi and others as well. So I think this next sort of 2020 wave of quote unquote institutional is actually more of these really large tech firms. And then I think kind of, down the road, you definitely will see more from the traditional asset managers. Right now, we see more of the family offices who have broader discretionary ability to invest in things, or funds that are primarily, hedge funds run by a couple partners. And so I think the larger asset managers will also eventually come. But to get them involved, you need better infrastructure, but you also need more use cases. And I think you need more scalable protocols, or you need, really mass adoption. But that's what's sort of exciting about first having this upcoming tech wave, because I think they have a lot of the distribution mechanisms and technologies to potentially really help that.
So is Tagomi planning, for this big tech wave? Are there any, specific products or services that you're going to start to offer to work with these large tech companies or the assets that they're going to offer?
Yeah, absolutely. So as we do prime brokerage, best execution, you can come in, do lending, shorting, and other things. One of the mechanisms you can do that by is an API. And so we've built both a REST API and a WebSocket API. Now we just finished our Fix API as well. And adding things like automated KYC AML to some of these feature sets will also really help. So for us, it's all about building that underlying infrastructure. So today it's about aggregating exchanges, market makers, custodians, lenders. But then in terms of giving it to the client, it could be through a GUI, but it could also be through programmatic APIs. And so that makes it really easy for a large tech company or a trading platform to just plug in what we've done and start offering Bitcoin or starts trading it or other digital assets. So that's absolutely a class that over the last few months, as we've been bringing these API products to market, we've been really focused on.
Okay, great. And so Tagomi recently got a BIT license. So I want to ask you a little bit about that process, but also, also maybe more generally speaking, to start with, what is Tagomi doing to ensure that it's working in a way that complies with United States law? And are there plans perhaps to get more licenses, not necessarily within the United States, but as you continue to expand your global presence? So, and that's kind of a three-part question. So let's start with just general compliance with United States law. What are the things that Tagomi is focusing on?
Yeah, so it really starts with team and approach. So our first hire outside of the three co-founders was actually our general counsel. And he's an attorney, he had worked at the SEC, he had been a VP of compliance at Goldman, and so had a great background. We also have a CCO who's an attorney and worked at the SEC as well. So from very early on, we brought on people who were very familiar with, the rules and regulations. Obviously, my co-founder, Greg, when he ran Goldman's electronic trading desk, interfaced a lot with regulators. And so I think just having an approach of building really robust KYC AML policies, having an approach of having an open dialogue with regulators. We've traded with only accredited investors to date, and we have these policies and procedures. And in addition to that, then we went and we pursued the necessary licensing. And some of it was definitely not cheap or easy. BIT license is one example of that. We were the 19th company to get it, and obviously had to prepare a lot of documentation for that, have a lot of the right policies in place. But then it allowed us to get MTLs in a lot of other states, which are important to us, like Texas or Illinois or Connecticut. And so for most of the country, folks can use Tagomi. We're also registered with FinCEN. We're pursuing an e-money license in the United Kingdom.
Okay.
We met with the regulators there. We met with the regulators in Hong Kong. So it's definitely been an area, of the $28 million we raised to date, one of the reasons, we raise more money is to be able to, be compliant. And that's something that our investors, but our clients also really expect in many cases. I would say, something that would help for sure is it's not like we like having to comply with every compliance piece and it being different in each state. So I think what would help for sure is more standardization. And I'd say that's a kind of common piece of feedback I think the regulators are hearing, but it's definitely difficult to be doing all of this on a state-by-state basis. So if there was a federal way to do it, if there was a way where you can get it in one state and passport to another, or if the states communicated more, I think, we really want to focus on building the best trading technology, getting best pricing, being the best brokerage. And so there's certainly things that could make the legal and regulatory process easier, but we've done everything we need to do to comply with it and, feel like we're a leader in that space.
Yeah, fantastic. So you also, I just read about this earlier today, actually, that Tagomi is one of the new members of the Association for Digital Asset Markets, which I believe it seems like a self-regulatory organization that has today released a code of conduct. So can you talk a little bit about why Tagomi chose to join this self-regulatory association and the role that you think that self-regulation is playing in the cryptocurrency space as it stands today?
Yeah, so we joined it pretty recently. We're a junior member of it, so not necessarily the driving thought leader. Yeah. But I think organizations like that are helpful in that they can at least outline some guidelines, which are, very focused on what's actually happening in industry. So they can at least give a perspective on, hey, as industry participants, here's a framework we think is reasonable. Obviously, it's much more up to the regulators on a state basis, on a federal basis, to really define, what are digital assets, which ones are securities, what licenses you need to operate, to do different trades. So we definitely look to that for formal guidance. But we think some of these informal groups definitely can provide a lot of information to those regulators. And so the quality of players and especially the work they've done to sort of educate regulators, specifically the Atom Group, we thought was compelling. And we've been having similar conversations with the regulators. And so I think it makes sense to sort of streamline that and to work with a group like that.
Okay. I don't, where do you see Tagomi in the next 5 years?
Yeah, I think, for us, there are retail exchanges for retail folks placing small orders, buying and hold, and kind of everyone else is served. They're not really strong platforms for people doing larger trades, people doing more complex trades, folks who want to do lending, shorting, margin. And so, whether it's a huge institution that needs to use that or it's just a more savvy trader who maybe used to work at a bank or somewhere like that and is just trading their own money. So it's a real spectrum of folks we feel is underserved. And if we can get them involved in the digital assets market, investing, trading, providing capital, I think it's ultimately really good for the projects, many of whom, obviously benefit from having more capital and more people interested in the space. And so for us, that's kind of the mission and the goal. And over the next 5 years, it'll certainly evolve in the types of clients we work with. I think I see us working more directly with many of the token projects, helping them on things like treasury management and educating them on how to not move markets when they maybe sell from their foundation. So I see us getting much more integrated with those projects. I see us integrating to decentralized exchanges. There's some really great ones like Uniswap and others, DYDX. I see us looking at new alternative custodian solutions that could also be decentralized. And so I could see our business, really becoming more of a hybrid of sort of DeFi and centralized finance. And so I think our product will evolve, kind of who we work with will evolve, and hopefully the entire industry will evolve where more and more real assets are, now being replaced by, native tokens or maybe digitalized themselves. And so I think, there'll be a lot of change, especially in platforms where I think like, the peer-to-peer is the product, the people are the product, like an Airbnb or an Uber. Is there an interesting way to tokenize that and really have incentives more aligned, have governance more aligned? That's super exciting stuff. I think at the same time, a lot of the protocol technology has to improve to make that scalable. So as the industry evolves, I think we like to keep a very open mind on what Tagomi will look like and who we will work with, but we have that guiding star of everyone besides retail we feel is underserved in this space.
Marc, thank you so much for your time.
Yeah, Rachel, thanks so much for having me.